Electric vehicles could revolutionize transportation, and China is at the forefront. But a recent report has sent shockwaves through the industry. China's EV market growth has stalled and could be headed for a significant tumble. Could this be a temporary blip or a sign of more serious issues? Are Chinese consumers losing faith in electric vehicles? Or are there hidden problems with the current technology or infrastructure? In this video, we'll dissect the reasons behind China's EV market collapse and see what's actually happening to the Chinese EV industry. So, stick around for the insights you won't want to miss, and don't forget to subscribe to the channel. China has been hailed as the leader in electrification for years, but recent trends suggest its position at the forefront may be slipping. Electric vehicle sales are showing signs of a slowdown, echoing global struggles among automakers to both boost sales and turn a profit in the EV market. Several factors contribute to this shift. So, let's investigate why we believe a significant crash in the Chinese EV market is looming. One key factor is the deceleration in growth of the EV market itself. While there was a surge in EV sales over the past few years, reaching a staggering 8 million units in 2023, the pace of growth has notably slowed. Initially, the market share of plug-in electric cars soared, reaching around 37%, which seemed impressive. However, upon closer inspection, the growth trajectory reveals a significant decline. 2020, the market share was a mere 6.3%, jumping to 15% in 2021 and peaking at 30% in 2022. However, the growth rate has steadily decreased, dropping to just 46% last year. This substantial decline indicates a loss of momentum in the once thriving market. Looking solely at electric vehicles, they accounted for at least 25% of the market share in 2023. However, the year-over-year growth rate was a modest 31%, indicating a slowdown in EV adoption. Interestingly, the surge in market share was primarily driven by plug-in hybrids, which experienced a remarkable 80% increase in the last year alone, constituting 12% of the market. This trend clearly shows a shift in consumer preference towards plug-in hybrids, likely due to their lower cost and alleviation of range and charging anxiety. Similar to their American counterparts, Chinese consumers are increasingly opting for plug-in hybrids, favoring their affordability and convenience. Moreover, China's population faces financial constraints compared to North America and Europe, impacting their purchasing decisions. With the Chinese economy slowing down, citizens are prioritizing investments in real estate over expensive electric cars. This financial reality underscores the challenges facing the EV market in China and highlights the importance of addressing affordability concerns to stimulate demand. Furthermore, the Chinese EV market appears to have transitioned from the early adopter phase to a more mature stage. While early adopters were enthusiastic about embracing the new transportation technologies, the broader middle class was more cautious. This segment of the population is less willing to accept unfamiliar modes of transportation, preferring to stick with traditional options. As a result, automakers must navigate this shifting consumer landscape and tailor their offerings to meet the evolving preferences of the Chinese market. Another contributing factor is the increasing competition within the EV sector. With more players entering this broad EV market and existing manufacturers ramping up their EV offerings, competition has intensified. This heightened competition has led to price wars and squeezed profit margins, making it challenging for companies to maintain profitability. Additionally, technological advancements have led to a flood of new EV models, saturating the market and diluting customer interest. Competitive landscaping will be more challenging and pricing pressure will ensue. Although EV demand is set to remain resilient, the industry will confront three major challenges on the supply side: overcapacity, new model launches, and the rise of new tech entrants such as Huawei and Xiaomi, which point to a growing competition, Bernstein said in one of its important notes. Moreover, regulatory uncertainty and shifting government policies have added to the Chinese EV market's challenges. Changes in subsidy programs, mandates, and regulations have created a volatile environment for automakers, making it difficult to predict future market conditions and plan long-term strategies. This uncertainty has dampened investor confidence and deterred potential buyers, further exacerbating the slowdown in EV sales. Furthermore, consumer concerns about EV affordability, charging infrastructure, and range anxiety continues to hinder widespread adoption. Despite efforts to address and resolve these issues, such as expanding charging networks and offering subsidies, many consumers remain hesitant to switch to electric vehicles. As a result, the growth potential of the Chinese EV market is constrained, casting doubts on its prospects. Additionally, the Chinese market is also experiencing some potholes. In 2017, the glory days of car sales in China, 24 million cars found new owners. Fast forward to today, and those numbers have taken a dip, ending the last year with a total of 21.7 million cars sold. It's not just a minor slowdown, it's like hitting the brakes on a highway. But who's feeling the pinch the most? You guessed it, the dealers. With an overproduction of electrified cars flooding the market, selling vehicles has become as tough as driving uphill in a beat-up old truck. Thousands of dealerships have already hit the skids, and we're not talking about small-town mom-and-pop shops here. Even the big players are feeling the heat. Take the Guangdong Yangda Investment Group, for instance. They had 80 outlets scattered across the southern province of Guangdong, dealing in big names like Honda, Volvo, and the Chinese GAC Ion. But then, they dropped the bombshell out of the blue: bankruptcy. Customers were left scratching their heads, wondering if they'd ever see the cars they'd ordered or get their money back. It's a mess, and insiders say it's been brewing for a while. Rumors have been swirling since last April about employees not getting paid. Now, it's official. The company owes its workers months' worth of wages, and there's little hope they'll ever see a dime of it. It's a classic case of promises made, promises broken. The shares of Chinese electric car manufacturers are also off to a rocky start this year. They face headwinds like intense competition and ongoing price battles that are squeezing their profits. It combined with overall market jitters, it has braked its stock performance. Just look at the numbers. Hong Kong listed shares of NIO and Xpeng have taken a nosedive, plummeting more than 18% and 16% respectively since the beginning of the year. Li Auto hasn't fared much better, losing 12% of its value. Even BYD and Zhejiang Leapmotor haven't been spared, shedding nearly 2.5% and 12% respectively in 2024. Analysts at Bernstein echoed these concerns, pointing out that competition in the domestic market is going high and likely to keep squeezing both prices and profits for electric vehicle manufacturers. Morgan Stanley chimed in with similar sentiments, cautioning that investors are watching China's auto market due to ongoing competition and macroeconomic uncertainties. The situation isn't looking any brighter on the sales front either. Data from the Chinese Association of Automobile Manufacturers, cited by Fitch Ratings, reveals that passenger electric vehicle sales growth slowed to 28% in the third quarter of 2023, down from a whopping 108% in the same period a year earlier. And the outlook for 2024 doesn't inspire much confidence either. Fitch Ratings anticipates that growth slowdowns will persist, projecting a modest increase in China's domestic passenger car demand to nearly 22 million units amidst economic uncertainty. It's a bumpy road ahead for Chinese electric car manufacturers navigating stiff competition and shifting market dynamics. And then there's the phenomenon of China EV graveyards, which may sound like a dystopian movie plot, but it's a real issue plaguing the country's landscape. Vast fields are littered with hundreds, if not thousands, of abandoned electric vehicles, left to decay under the sun. It's a stark reminder of what happens when demand and supply are thrown out of balance. So, how did we end up here? Well, it all started years ago when Chinese authorities went all in on electric cars to carve out a significant role for the country's automotive industry on the global stage. With little hope of catching up to Western legacy car makers and traditional combustion engines, electric vehicles became the chosen path. The government flooded the industry with massive support, and soon a flurry of electric vehicle startups emerged, reaching a staggering count of over 500 by 2017. But with so many players in the game, it was a recipe for disaster. Selling enough vehicles to meet government requirements for financial support became a challenge. In a desperate bid to meet quotas, some of these startups resorted to selling their EVs to car-sharing companies, even if they had no intention of using them. Often lacking range and performance, these vehicles gathered dust in these eerie graveyards, unused and forgotten. This scheme provided a temporary lifeline for struggling startups, but wasn't a sustainable solution. As the inability to sell their EVs on the regular market persisted, many companies faced bankruptcy. The number of electric vehicle startups dwindled from over 500 in 2017 to just 91 by 2023, indicating the industry's downward spiral. In conclusion, while China's EV market has experienced remarkable growth in the recent years, signs of a slowdown are becoming increasingly evident. Various factors are contributing to the impending crash in the Chinese EV market, from decelerating growth rates to heightened competition and regulatory uncertainties. So, which category do you fall in and why? Chinese EV lovers or haters? Do let us know in the comment section below, and don't forget to subscribe to the channel. See you in the next video!